This video is on financial engineering. So I wanted to make a video on financial engineering, and this is one of those terms that people hear and they get really intimidated by. And I want to kind of address that because I think that this is a really powerful concept when you're in business. And I want to break it down for you in some simple concepts that if you understand these concepts will really put you a step above other accountants. Let's get started with what is financial engineering? And I'm going to give you a simple definition here. Financial engineering is using financial tools and techniques to improve resource effectiveness. Now, this definition is a little vague, I realize that. But I'm going to break this definition down for you by giving you 4 key concepts. And these concepts will really explain from a practical standpoint what this definition really means and how you go about doing financial engineering. So the first concept you need to understand is this. Everyone exists on a scale of financial maturity. So there's this scale from low financial maturity to high financial maturity, and everyone exists somewhere on this scale. So let's talk through this a little bit. If we start at the low end of low financial maturity, the starting point when you're looking at somebody's finances is somebody who uses exclusively cash. So we're talking about physical cash here that you hold in your hand. So this would be a business that uses physical cash to do all of their transactions. That's really the starting point when you're talking about financial maturity. So if this is your business, if you're using exclusively cash, what is a financial tool that you could implement to improve your effectiveness as a business? Well, how about budgeting? Budgeting is a financial tool that helps you better manage your money. And so this business, when they institute a budgeting process, they're taking one step higher on the scale of financial maturity. So that's a really simple example of what financial engineering can look like. And this is a really long scale, and let me just throw some other bullet points up here. And this is not an exhaustive list by any means. There's probably hundreds of different financial tools out there. This is just to give you kind of a sense of how this works. So let's go down this list. Starting from the low maturity end, you have cash, you have budgeting, you have using a checking and savings account, you have investment plans, you could use insurance, you could use credit cards, you could use a business loan, you could do annual audited financial statements. That takes you another step higher in terms of financial maturity. You could have internal controls. You could have different business legal entities. You can do company restructuring. You could issue stock. And then when you get to the higher end of financial maturity, you can do things like trading financial derivatives to mitigate different business risks. So you see how you have this whole scale here from low to high, and everybody falls somewhere on this scale of financial maturity. So that's the first concept to understand. The second concept to understand here is that everyone can always improve their financial maturity. So I don't care what business you are, you can always move higher on this scale. It's almost like there's no end point, that the scale just keeps going on. You could be a small business, you can be a large business, but you fall somewhere on this scale and there's always something you can do to move to higher levels of financial maturity. Now, I'm not advocating here that every business should leapfrog to the end of high financial maturity. That's not what this is about, because it usually doesn't make business sense if you have, say, a small company that's just starting out, to jump all the way to the high end of financial maturity. Because some of these tools and techniques take an army of accountants to really manage. And that doesn't always make sense for every business. But what this is about, this is about identifying where you're at on this scale now and what is the next step. That's all we're talking about here. What is the next step you can take to push your business farther along this scale? So, why do we want to do this? That is the third concept. It's all about why. And the third concept is increasing financial maturity improves your resource effectiveness. Well, that's just a really fancy way of saying this gives you more money. All of these financial tools and techniques were designed to give you more money. That's what finance and accounting is all about. So now, they're not guaranteed to give you more money. You could lose money using some of these tools, but the intention behind all of these tools is that they're there to make you money. If you're at the low end of financial maturity, if you can move to higher levels, your dollars will stretch farther. And let's look at the example we talked about earlier of moving from a cash system to a budgeting system. The budget is in place to help you manage your money more effectively. Well, that means that every dollar you have stretches farther. So you, in essence, just given yourself more money. You've made your resources more effective. And you can go down this whole list, and that's what all of these things can do. They can give you more money. So it's really beneficial the farther you can move your business down the scale towards levels of higher financial maturity. So let's go to the fourth and final concept here, and this is the most important. Everyone can do financial engineering. So I know that some of this stuff is intimidating. I know that some of these topics are complex, but this is something that everybody can do. It just takes learning. And in fact, everybody is already doing financial engineering. If you have a checking and savings account, you are using a financial tool to effectively manage your money better. All of these things are just tools that are out there. And so the more you can learn about these tools and the more you can integrate them and use them effectively in your business, the better off your business is going to be. Now, I want to end with a message for accountants. Because accountants out there, financial engineering is an area where you can really add value to your organization. If you look at your organization and you can identify where you fall on this scale of financial maturity, and then if you can identify what are the next steps that you can take to push your business forward along this scale, you can really add tremendous value. So I hope you liked my explanation of financial engineering. This is a really deep topic and I love talking about this stuff. In fact, next week I'm going to release another video on financial engineering and I'm going to walk through some examples, some more advanced examples of what this looks like in a business. If you like this video, click on the subscribe button down below. I release a new video every week on accounting and corporate finance, so come back and check out next week's video.